So you want to get rich trading? Let me tell you why you're going to fail. Okay, I'm going to show you the difference between a private investor and a professional. Now, prices can only do one of four things. They can either go up and down and up, or down and down. Let me tell you why you're going to do the wrong thing in pretty much each of those scenarios compared to what a professional will do, and why, therefore, the brokers who will take the other side of the bet are going to make the money and you're not. Let's say the easy way, it goes up and up. And of course, that's only going to happen about 20% of the time, not even 25% of the time, about 20% of the time. So let's say it goes up and up. Well, you, the private investor, will probably at this stage, it goes up a little bit, you panic, you cut your profit short. We know this statistically. As a private investor, you will do that. A professional, well, it goes up a little bit, we'll then add another position. We'll buy some more, a fresh new position. We will risk the profits we've made here to try and make more on the expectation that 20% of the time it will indeed do that. We'll have doubled up our position and make a lot more money. It will also mean that we can start small, knowing that if it does go up and we've got some profits, we'll only be risking those profits and adding to the position. So it's okay if we start small, just in case it doesn't work out. So there, we're already doing better than you. What about up and down? Well, it goes up, it comes back down. Private investor professional gets out. Strategy didn't work. It's the plan that we had did not work. We get out. Our stop loss by that stage will probably have moved up to that when the price moved up here. So we'd have to exit. Private investor goes back to here. They're now in one of these scenarios. And guess what? They haven't got a strategy. They don't know what's going to happen. I don't know what's going to happen. So the private investor in that scenario, rarely it works out good for them. Rarely. Okay, so what about this scenario over here? Professional goes down here, hits the stop loss. We're out of there. Okay, small loss, we're out. Private investor goes down there, comes back up, and they think, wow, you know what? I'm right. I should never sell when it's gone down because look, it came back up. Well, that's stupid because the next time it's going to get them there. So let's have a look at that. Well, it goes down here. The professional gets out, hits its stop loss. You know what the private investor does? It drops a bit, keeps holding on to it. Worse still, gets a bigger loss or even adds to their losing position and gets an even bigger loss. This is what wipes out the private investor. Okay, and you know when they do this? When they've had a few of these. Because they think it worked out once, so let's do it again. And that is going to destroy them. That is going to destroy them. So neither the difference between a professional and a private trader. The private investor pretty much does the exact opposite of what the professional trader does. Good luck with your trading. Have a look at alpeshpatel.com/links if you'd like some free tools and resources from a hedge fund manager. Thank you.